Guys, stop kidding yourself. It's not a matter of if, it's a matter of when. All Canadian entrepreneurs will go through an audit. And the question that's probably popping in your head like a bunch of firecrackers is, when will I get audited? You're asking the wrong question. The question you got to ask yourself is, am I ready? And the answer for an overwhelming majority of Canadian entrepreneurs is no. You might also ask, why will I be audited? I'm just a small entrepreneur trying to make a living in this cold, harsh world. Listen, stop playing the blame game, stop playing the victim card, and you have to try and understand economic situation at this very moment. As per Stats Canada, an organization funded by the federal government, in January 2009, the net federal debt was 0.5 trillion, which is $500 billion. In March 2024, the latest information as per the date of this recording, the net federal debt was $1.23 trillion. Now you might be wondering, what's a net federal debt and what would be a net federal asset? So let's get into it. A net federal debt is when your total gross debt is greater than your total assets. When your total gross assets are greater than your total debt, you now have net assets. Now, here's a simple example to bring the point home. You owe the bank $20. You have $10 in your checking account. Therefore, your net debt is $10. Anyways, let's go back to class and dig a little deeper on this net federal debt. Come with me. Canada's population in January 2009 was 33.4 million. Canada's population on March 2024 was 41.0 million. Over 15 years and 3 months, the net federal debt grew 146%. Over the same time frame, the population grew 23%. What that means is the debt is growing 6.35 times faster than the population growth. Listen, I'm just a little guy conveying a small message that numbers don't lie. However, the ultra-talented and beautiful Shakira once said, hips don't lie. Is she right? Am I right? Are we both wrong? Or are we both right? Please let us know in the comments section. Oh, and while you're at it, don't forget to like and subscribe. Let's go back to the topic. January 9, 2009, the federal debt per person was $14,970. March 2024, the net federal debt per person was $30,000. Now, here's some more food for thought. The net federal debt per capita has more than doubled. The average Canadian salary has not doubled during the same time frame. In 2009, grads with a bachelor degree in finance and accounting were being paid about $40,000 as juniors in top accounting firms. In 2024, grads with the same bachelor are being paid about $47,000 as juniors in top accounting firms. The conclusion is, Canada is not as wealthy as it used to be. Therefore, the country has no choice but to go after its citizens who are also not as wealthy as they once were. Guys, this is not my opinion. These are facts. The numbers are verifiable. Therefore, beware to those who are trying to be cute with their accounting and taxes. Again, the question is, are you ready? Another legitimate question that might be popping in your head is, how does the CRA choose a file to audit? Now, the CRA chooses a file based on risk assessment and other factors. Let's look at these 9 factors and risk assessments and dig a little deeper. Come, follow me. Number 1, inconsistencies in your tax returns. This is a big red flag for the CRA. If your income or deductions vary significantly from year to year without explanation, it might raise eyebrows.
Number 2, your income doesn't match your lifestyle. If you're driving a luxury car and live in a mansion but report a modest income, the CRA might get curious. They often compare your reported income to the average in your neighborhood or profession. Number 3, you're self-employed or have a cash-based business. Self-employed individuals and cash businesses are often under more scrutiny. Why? Because it's easier to underreport income or overstate expenses in these situations. If you fall in this category, keep meticulous records of all your invoices and expenses. Number 4, you have foreign income or assets. With the increasing global economy, the CRA pays close attention to international transactions. The CRA has agreements with many countries to share financial information, so honesty is the best policy. Number 5, you claim a lot of business expenses. While legitimate business expenses are tax deductible, claiming too many can trigger an audit. Be especially careful with home office deductions, meals and entertainment, and vehicle expenses. Make sure you can justify each expense. Number 6, you work in a high-risk industry. Some industries are more likely to be audited than others. These often include construction, restaurants. If you work in one of these fields, be extra diligent with your record keeping. Number 7. Yes, lucky number 7. Someone reported you. Absolutely, the CRA has a snitch line. If someone reports suspicious tax activity, it could lead to an audit. Number 8. You've been audited before. If the CRA found issues in a previous audit, you're more likely to be audited again. They might want to ensure you've corrected the problems they found last time. Number 9. This one might come as a surprise. Your tax return was prepared by someone on the CRA's radar. Yes, ma'am. If your tax preparer has a history of filing fraudulent returns, it could affect you. Always choose a reputable tax professional. Don't be afraid to ask about their qualifications and experience. Non-CPAs might be a little cheaper, but remember, they have nothing to lose. They're not as qualified and they don't have as much experience. And most importantly, they don't have a license on the line. Number 10, random selection. Yes, it's like going through the airport. Sometimes it's just luck of the draw. The CRA does select some returns randomly for audit to keep the system fair. If you're chosen this way, don't panic. It doesn't mean you've done anything wrong.
Welcome back, guys. Now that we've talked about what might trigger an audit, let's talk about the 3 types of audits. Let me put one thing out there just in case you didn't know. Not filing your tax return is a federal offense. And the CRA has the power to seize your bank accounts. And in a worst case scenario, if you're caught with tax evasion or fraud, it can also lead to jail time. Secondly, if your accountant is advising you to stop unethical practices, please listen and stop immediately. In addition, if your accountant is assisting you or turning a blind eye to your unethical practices, please change your accountant immediately. In a soft audit, you will receive a letter from the CRA sent to your inbox, and it will have a deadline of when you have to submit the information that's been requested. Do not miss this deadline. The request will be quite simple. They will usually ask for interest expense. They will ask for meals and entertainment. And a third that's very popular is your home office expense. If you are caught in a lie, or if you cannot provide the documentation for the claim you had put in your tax return, you will then be assessed a penalty and interest and will have to refund the money you may have received, or you may have to pay additional taxes. But once you are caught in an error or a lie, you are now on a radar. Moving forward, if you're caught again, the penalties are higher and you will lose the benefit of the doubt. Let's move on to a hard audit. Now you are on the radar. The CRA can ask for different pieces of information spanning over multiple years. Some very popular items that are requested, it could be payroll ledgers and remittances, sales contracts for revenue that's deferred. Yes, if you've earned revenue but you've deferred it, the CRA wants to know, are you deferring revenue as a way of tax evasion? They will ask for bank account statements. They will ask for receipts of travel and entertainment. And again, not just for 1 year, but for multiple years. And they will also ask for other information that might not even make sense to you. For example, they might ask for your lease contracts or other contracts with different vendors. So therefore, keep a digital copy of all contracts and all invoices. Bank statements and credit card statements do not count as proof of expenditure. Before I move on to a CRA audit, I want to share a quick story with you. A client was assessed a hard audit, and they asked for several pieces of information over the past 2 or 3 years. And in this audit, it was just very scattered information, almost felt like a full audit. Almost every GL on their income statement and balance sheet was being looked at. I called the CRA just to find out 2 simple things. A, what exactly is it that they're focusing on so we can send them the information that they want and close this file? And number 2, what triggered this audit? And the agent was very receptive, and he actually gave me the answers to my question, which I did not expect him to. He said the reason for this audit was because of this sale of business that had taken place. They felt there were some errors in the way the tax remittances for payroll had been filed in prior years. I said, that's fantastic. And then number 2, I said, if payroll is the issue, why are you focusing on sales contracts and rental agreements and so on and so forth? And the answer was, if they are involved in payroll fraud, they might be involved in fraud in other areas of the business. Therefore, they wanted to dot the I's and cross the T's. So once again, guys, be very, very careful with your accounting and your taxes. Last but not least, the CRA audit. I do not wish this on anyone, even my worst enemies. When you fail a soft audit, it escalates to a hard audit. When you fail a hard audit, it leads to a CRA audit. In a CRA audit, CRA agents will come to your office. They will not be very nice to you. They will thoroughly go through every inch of your office. They will go through your computer. They will go through your filing cabinets. And if necessary, they will also go through your emails. At this point, the CRA is not your friend. Do not offer them anything to drink, to eat, or anything of that nature. At this point, they are on a witch hunt. Provide the information they ask for. Provide it on a timely basis. Do not show any attitude. Be polite, be courteous, and if you cannot provide a document, tell them up front. If you are involved in fraud or tax evasion or any type of misstatement on your financials, let them know up front. Do not wait for them to find it. Do not hope they will not find it. Because the more time they spend, the more aggravated, the more frustrated they will get with you. And they will be upset with you at the simple fact that you hid the truth, which will make it a lot more worse for you. At this point in time, if you're in this situation, I strongly recommend you get a good tax lawyer, you get a good accountant, and if necessary, get a good litigation lawyer. These matters are very serious, and like I said earlier, it can also lead to jail time. So there you have it, folks. It all boils down to good record keeping, timely filing, and of course, a solid accountant. And remember, it all starts with a simple conversation. Till next time.